Welcome back, YouTube. My name is MrSchroeter, and I want to thank you all for tuning into this channel. Of course, you guys are tuning into the best finance channel on YouTube, where we're going to tell you guys all the inside tips and tricks. One of them that I wanted to talk about, and specifically today, what I'm talking about is loan term. Now, loan term is probably one of the most overlooked factors when we're talking about applying for loans, because we don't usually think about loan term as a factor. You know, we don't think about the fact that when we're applying for these loans, that the term, how long we have the loan for, can affect our approval rate. So I want you guys to think about this moving into the future when applying for loans, rather personal loans, auto loans, home loans, mortgages, whatever you're applying for. Think about this, because I saw this today, earlier this morning, and it really made me think about it because a lot of people don't understand this. A lot of people I've seen with the secured loans, they'll apply for secured loans and they'll get denied, and they're like, well, how did I get denied for a secured loan? My credit must be horrible, blah blah blah, credit check, whatever. And I tell you guys all the time about this concept of debt to income ratio, because it's very foreign to a lot of people, but it's very important to a loan officer, because a loan officer has to take into account your debt to income ratio in order to get you approved for new loan products. They have to take into account your debt to income ratio to figure out and factor how they're going to be able to solve your problem. So this concept of a debt to income ratio, what is it? How does it work? All these good things. Well, if you have a shorter loan term, say you get a $5,000 loan and you're going to pay it off in 6 months. Well, that $5,000 loan, if you're going to pay it off in 6 months, your payments are going to be, $800 a month. $600-700 a month, depending on what interest rate you get. So with having that interest rate, it's going to make it extremely hard for you, in order to pay that back if you're someone who has low income versus high income. Whereas you apply for that loan and you're thinking, oh, well, it's a secured loan. I'm putting down my money. It's $5,000. I'm going to pay it back in 6 months, right? Your loan officer is looking at that and they understand that, but they also understand per, federal regulations, there's certain things that they're not allowed to do. So they have to deny that application, because they would have to extend out your term over years in order for them to be able to actually offer you the loan. And a lot of the times you won't get a counter offer for that, for an extended term. They will just deny you. So if you get denied for a loan, what I want you guys to do is not just accept that denial, but rather call that bank back and say, hey, is there any way we can extend the term out longer? And, potentially that could allow me to get that approval. And if you want to pay that loan back faster, there's nothing stopping you from paying that loan back faster. Yes, it can in turn affect you, when you're talking about how quickly you paid off your loan. When other banks look at that, if you had a 5-year loan and you paid it off in 6 months or something. But a lot of banks push your due date back as you pay. So if you pay 2 years in advance, they just push the due date back. So just let the loan sit there, and then the last month of the loan actually pay it off, and then you've got all that positive payment history reporting for all that time too. You can go to other banks, you can get other loans. Your debt to income ratio is going to be lower because it's going to show that you've paid out for that long already in advance. And it's just one of those things that is very, beneficial and useful to think about when you're applying for loans, is to make sure that you are putting the appropriate term to match your income, because your loan officer may or may not give you a counteroffer for an extended term. However, if you know to call and ask for a reconsideration with an extended term, or to put in a different application, and put in for a longer term, that could potentially be the difference in you being denied and you being approved. Just as well as putting in for multiple loans that are smaller rather than one larger loan. Because that larger loan, that payment might just be enough to throw off your debt to income ratio, and put you in the hole. Whereas if you do those smaller loans, you may be able to get a few thousand here, a few thousand there, um, until you can get up to that bigger loan. And if you get them rapidly enough through enough different financial institutions, then what's going to in turn happen is, because you're getting them so quickly, the banks aren't going to actually be able to tell what you're doing at the other bank. All they can see is that you're shopping somewhere else because you have inquiries somewhere else. So if you're able to get approved for all of those loans, then now you may have more money than you thought that you wanted to apply for in the first place. Maybe you can use some of that and pay some of those principals down. You have extra reporting trade lines. Maybe you use some of that money and you invest it further and you make more money back. However it is, but take advantage of knowing these particular tactics and knowing the things that the banks are looking for when they're loaning you money. Also remember that the longer the term, the more money that the bank is going to make. Because regardless of your interest rate, the longer the term, the more money the bank's going to make, because they're getting paid that interest over time. However, if you pay that loan back faster, then you're not going to be paying that interest anyway, so it doesn't matter. So just take advantage of knowing these different things. Take advantage of having this knowledge and build moving forward. There are so many opportunities out there for you to get funding. There's so many opportunities out there for you to get loans. And if you know the proper places to go and the proper things to say and do, then you can in turn get the money. Imagine if you have, 3 or 4 banks that will give you 20,000 each. And you're able to apply through all of these banks to at the same time, to get that money. So now you're sitting on $80,000 because you applied within, a time span of a few hours or a few minutes. And by sitting on that much money, you're that much more capable of accomplishing so many more things. So take advantage of that. And now you can shop the interest rates on the loan. Say you got approved for 20,000 from this bank at 18% and 20,000 from this bank at 12%. And then another bank approves you for, 10,000 at 6%. So maybe you take the 10,000 at 6%, and then you take another 10,000 from that 12%. And now, you average out your interest rates, and your interest rate's going to fall somewhere around 9% overall for all that money. If you're paying it back at the same rate, but if you pay it back faster, then it's going to knock down your interest rate, in turn make you more money. So just take advantage of these things, guys. Really brainstorm and think outside of the box and think different ways that you are able to make the banks think that you are attractive. Think of different ways that you can get the banks to fund you, and try to find those banks that are willing to fund you rather than those banks that are more conservative. If you can find banks that will throw money at you, then you can accomplish a lot of things in a very short span of time, because you can take that money that they're throwing at you, invest it in other things, and then grow and build off of those investments. For some people, you're looking at, $20,000 maybe their annual salary. Maybe that $20,000 they can use and, you know, take a year off their job, pursue their business, really pursue it, make sure that they're accomplishing all of their goals, accomplishing all the things that they want to, and then they will be able to, you know, move to the next level. Maybe that $20,000 is 3 months for you. Maybe that $20,000 is 6 months. But whatever amount of time that could be that jump to potentially allow you to make that much more money, take advantage of it. You know, so of course, as always, thank you all for watching. Thank you all for tuning in. We'll see you guys in the next video, and peace out.